and welcome to the Camp Financial Stock Market Update for Monday, January 9th. So we have made it through the first week of trading in 2017, and the stock market continues to do what it always does, right? I mean, some companies are up, some companies are down. But as long as you've been diversified across the right market segments, you have the right stocks within certain segments in your portfolios, you're up pretty big. If you've got just kind of the standards, you're still up, and you're up just a little bit, but we're only 5 days in, right? So that's the thing to keep at the forefront of your mind, right? So this week, I think on Friday, we got to essentially within $1 of the Dow 20,000. And I know that that's a big deal, and you've seen it on the CNBC and anywhere really that talks about stocks. Dow 20,000, Dow 20,000. And I just want to say it's really not that big of a deal, right? I mean, Dow 20,000, the thing is you should be more focused on, are the companies in the Dow making more money? And if they're making more money and the PE multiples, even if they stay the same, as these companies start to make more money, the Dow's going to go higher. So Dow 20,000, this year, if we get a 10% increase in earnings, you're quickly looking at Dow 22, Dow 23. We could be talking even possibly by the end of this year, depending on expansions of multiples and that sort of things. You may see Dow 25,000 before the end of the year, or it may be next year, or we may see the market sell off and we may go back down to Dow 13,000. We may see a 35% stock market correction and see the Dow down at 13,000, and then people are going to be piling back in. Some people will be piling back in. Some people will freak out and they won't want to use the stock market anymore as a way to grow their wealth. So I guess just don't get too caught up in the arbitrary numbers. With the Dow, with any of it, you got to understand when you're going to buy, what you're going to buy, and why you're buying it, right? So we've talked at length before on here. Sometimes, following the trend, buying in early on in a trend and letting it run and selling off, it makes sense and it's going to make you money, right? I mean, there's definitely proven traders that have made money doing nothing but trend following. There's proven traders that have done nothing, or investors, traders, whatever you want to call them, they've done nothing but value invest, and they've performed well over the long run as well, and they've made money. So regardless of where you end up as an investor, you can't just take a snapshot and see Dow 20,000 and say, well, things are great. No, you got to understand why it's there, what it's, what the stocks within it are doing, and and then just kind of roll with the punches as they come. So let's take a look, see. I will say before we get going, so we've got a few few companies coming out with earnings before today, before the market opens. Simulations Plus is actually one that let me take a look back because I know that that's in my my one oldest portfolio. See when I bought into this. Okay, Simulations Plus. We bought that back in April of 2015. Let's take a look. And we sold our initial investment in July of 2015, and then it just left the profits to run since then. The profits since then they're up about 50%. So from July of 15 until today, profits or the company's up about 50%. And we're just letting that. We're going to continue to let that run. Not worry about it. Not panic. It's a small amount of our total portfolio. So I will listen to the earnings call to find out, where they're at, what's going on. Do we expect some more growth? But the thing is it does pay a pretty decent dividend, and we're already playing with the house's money, so I'm not gonna, panic or worry a whole lot about what I hear in their earnings call. So what else is coming out? So after let's go with before. So before, you got Acuity Brands, light bulbs, those sort of things. Then after the market closes today, we've got WD-40, Barracuda Networks, which is a communication networking company, and Apollo Educational Group is after the market as well. Actually, I want to take a look at Apollo because it's been an interesting stock. I want to see if they have maybe a takeover bid that's happened, or why they're. No, it doesn't look like there's anything going back through. I don't see any bids or anything, but it's a company that's very, very tight day-to-day trading. Over the last 2 weeks or so, I mean, it's within pennies of where it was. If you go back to around the time of the Trump election, it was trading at about 870, quickly popped to 950, and it just kept bouncing against 950 and down, bouncing against 950 and down. Then it popped up, and now it's doing the same thing where it's running right there. Pretty much it pops up and touches almost $10, and then it drops back down. It actually looks like 996 is the high, so it's hitting in the high nines, but it's never dropping back down below 990. So very tight range bound stock there. I personally don't really like the education companies, but as far as they go, I mean, this is one here that has almost no debt. The one thing is they do not pay a dividend, but they've got $6 per share in cash. I mean, 2/3 of their share price is in cash alone. So I mean, it's definitely a company that's pretty lean. They've got a lot of cash sitting on the side, so they can take a few, probably even a few years without getting killed. Even if they would happen to lose a lot of students, there's definitely still the potential for this company to stick around. So that might be a decent stock where your downside is Well, I mean, it's not going to drop below cash value, right? At $6, it shouldn't, I guess. Um, and who knows where it could go from there. But so that kind of runs through the earnings coming out. Let's take a look at the heat map for last week. Let's look at the weekly performance. I usually go by the 1 day, but I think I'm going to start going by the week. I think that is a little more indicative of what's going on. So the biotech's pretty bright green. Google, Facebook, the bigger techs, Yahoo, all performed well. Credit service companies, the financials, Verizon, MasterCard, American Express, banks, banks were all up. Bank of America up 3%, to the smallest of the big banks, or the lowest performer of the big banks is Wells Fargo, up 0.36%. Big pain is definitely in the apparel stores. Limited Brands down 7.6%. Nordstrom's down 5.8%. You got Urban Outfitters down 4 3/4. But you do have Gap in there that was up 3 3/4, and that's all on their fourth quarter sales going into the Christmas season last year. Their sales outperformed. Then we jump over to the department stores. TJ Maxx is basically flat versus Macy's down 15% and Kohl's down 17.25%. A couple of companies, Macy's I know is definitely closing a lot of stores. I haven't seen anything on Kohl's yet. They may be as well, but department stores are really struggling right now. That's why you've seen Nordstrom's down almost 6% over in the apparel stores, and Limited Brands. I know they're closing some stores as well. So let's jump over to healthcare. Biotechs, for the most part, performing pretty well. Alexion Pharmaceuticals up 16%. Amgen up 6%. The only one down, Regeneron, was down 4%. That's of the big boys, I guess I should say. In the healthcare, you've got Allergan up 5 3/4, Mallinckrodt 6.5, and Mylan up 3%. Little bit of red in the major integrated oils, Exxon and Chevron, and that makes sense. Oil's down, but you've got some real strong dividends in those two companies. So, I'm not afraid of them. Again, Chevron's one that I've had for quite some time as well. So I think we will end it there. So you take a look real quick. So our oldest system that's based on quantitative, fundamental, and technical slightly outperformed the market last week, or outperformed the S&P, 1.71 versus the S&P up 1.7. Our undervalued stocks is trailing the network, or trailing the market right now. It's only up 0.31%. And our technical trading page is showing it up 0.07%, so it's basically flat for the year, and that's fine. It's one of those systems that it's a lot of times it's going to perform, underperform the market, but when those stocks get hot, it's going to well outperform the market, which puts it up better than the market over the long term. So, all right, guys, that's it. I still need to get that page built for the Dogs of the Dow so that we can track that, but been pretty busy around the new year here, so once we get a chance to dig into that further, we definitely will. So take care, and we will see you guys on Wednesday.